Morning. You're watching the MEM Edge show, and this is the show where we put you in front of where the action is in the broader markets. So let's go ahead and get started. I hope everyone had a wonderful July 4th holiday week. A lot of action last week. Let's see where it might take us going forward for this week and beyond. First, we're going to be covering today, of course, as always, we're going to review where the current markets are. As usual, you're going to want to have a very good sense of whether we're in an uptrend. If so, what are the prospects of that continuing before you take action with your trades? From there, I'm going to show you how you can use the market movers table on that first face inner page of StockCharts.com. We're going to take a look at Friday's table. Friday, of course, was a bit of a holiday. It was a pretty low volume kind of a day, but there were stocks that did see a lot of action, certainly relative to the broader markets. And we're going to see what was that telling us, so that given a Friday or even at the end of a day, you can really just take a minute or two and form a bit of an action plan, if you will, for the next day. And then from there, we'll take a look at some different time frames of charts from those various stocks. And each time frame is going to tell you a different story. If you are shorter term and intraday trader, of course, you're going to want to use different charts than longer term investors. And then from there, we're going to take a look also with using StockCharts.com, how you can uncover some higher yielding stocks. We're in a period here, certainly continued volatility. While trade talks have seen a bit of a truce, we are not out of the woods there. And of course, we have interest rate concerns. That's going to be a lot of the focus this week. So there's going to be continued volatility expected in the upcoming months. So this is going to be a way that you can uncover some of these higher yielding stocks to kind of counterbalance if you're a high growth investor and you want to, they're not going to be working every day. So let's go ahead and get started. I want to take us to where we are in the current markets as far as taking a look at a chart. So what we're going to do is look at the S&P 500, and we are looking here at a daily price chart of the S&P 500. And as you can see, what I've done is overlaid some simple moving averages on here. So the green line is your 10-day simple moving average. The red is your 50-day. Blue is your 200-day. And we ideally want to see these broader indices finding support at their upward trending shorter term simple moving average. And in this case, that is the 10-day. We are very clearly in a confirmed uptrend. Very, very constructive looking markets. Markets hit a new high again last week. And I know there are individuals out there that don't always view this as a positive, but I will tell you, we are in a current period of the markets where bullishness is not exuberant. There's still a lot of money flows out of the markets. So the fact that the markets are hitting a new high is actually in a period where, again, the bulls aren't out there waving their flags. That is a good thing. So there is an anticipation of further upside from here. So let's take a look at some of these other indicators I've overlaid. The RSI up here on the top, that's a relative strength indicator. It's going to be indicative of the momentum. In this case, for the broader markets, we can see that it not only is trending upward, which is bullish, it's up above this net neutral 50. So we are in good standing there. Down at the bottom, I have what is called a MACD, a moving average convergence divergence. Again, you want to pay attention to the slope, which is upward. That's positive. Also, the actual where it is located relative to this net neutral zero. So we are definitely in good standing in all counts here as it relates to the broader markets. And so we can now from here advance, and I'm going to take us, we want to drill down a bit further and take a look at some of the other various indices and also sectors, because within the markets, it's going to be really important for you to uncover where the strength is in the markets, because from there you are going to want to take action and again formulate your plan accordingly as far as taking advantage of where that strength is. So what we're looking at here is called a candle glance, again accessible from the initial interface page, stockcharts.com. And what I've done is gone ahead and populated it with these various sectors as well as the broader market indices. So we have the Dow, the NASDAQ, and then I'll go ahead and get into some of these sectors. And I've also included gold. We've seen a lot of action, certainly in gold stocks of late, and volatility. So from here, you're looking at a 2-month chart. I've gone ahead and added the RSI, the relative strength indicator, and you can sort your list of indices, stocks, whatever to your choosing, and sort it in descending order. I'm going to go ahead and update that. So we're looking at strength to weakness. So up here on the upper left-hand side, the consumer discretionary is surprisingly here in the forefront. It was up about 2% last week, and that is a bit better than the broader markets. And that's followed by financials. We've seen a really nice move into financials. This is very constructive for the broader markets. You want these financials to be participating. And then from there, consumer staples, surprisingly. So again, these are your stronger sectors within the S&P 500. And as we go ahead and drill down to this far right period, volatility is up about 8%, but we are only at 14. From my work, there's no need to be concerned, if you will, until we get back up into this 18 level and above. So indeed, the market's closed down today. We did get a pickup here in volatility, but we are fine. Take a look at gold. Now, gold had been on a real tear in the beginning of June into mid-June, and it is kind of waffling a bit here. Naturally, it's digesting this big move, but still constructive. So again, here we can, at the forefront, we know where the strength is. So ideally, toward the end, I'll go ahead and help you uncover how you can take advantage of this strength and uncover potential candidates. But before we do that, let me go ahead and share with you. I'm going to go to this first page on stockcharts.com. And this market movers is what we're going to be focusing on. And this is automatically on your first page. Quite simply, it is displaying to you, I have most active. You can also do percent up on the day, another very powerful preset screen so that you can quickly get another view of where the strength is. So I'm going to take us back and we're going to take a quick look at where the strength was on Friday. So taking us back to our PowerPoint display, quite simply, I took a snapshot of Friday after the close. This is the S&P 500. We're looking at the top 10, and this is, in fact, the most active. So I talked about Friday being relatively quiet, but there was activity out there. The markets, of course, opened very down on the day, and they managed to close flat. But what we want to pay attention to is on the close, those stocks that really not only saw a lot of volume on a very slow volume day, but they were able to outpace the broader markets. So we can see AMD, this is Advanced Micro Devices. Bank of America is another stock that it advanced despite a difficult period, and AT&T, and then Oracle. Now, oftentimes these stocks are going to be outpacing for a reason. If you are inclined, you may want to go ahead and check out the news as to why these stocks may be advancing. But we're going to take a look and see, are they today continuing to advance? Because oftentimes you will see that over the weekend. Individuals will dig deeper, uncover what those news items are. Are they bullish? And then that bullishness will carry on. Let's take a look at the other market movers. This is with the NASDAQ. Same idea. Those areas that were the most active. Again, AMD is showing up on both screens. AMRN is a biotech stock. Some of these others, when you do the NASDAQ, they're going to be super small cap and not quite as compelling. But really, it doesn't have to be those that are up on the day. As I mentioned, Friday was a bit of a difficult period. But the fact that Microsoft saw a lot of action on Friday. Now, of course, it is a well-traveled stock, but it is still going to be of interest to us. So let's go ahead back and get into looking at where are these stocks today. Was it worth our time, if you will, to take a look at the close? And so we're going to take a look at some of these stocks that were on that list from Friday's close. And sure enough, this is Advanced Micro Devices, and we can see that the stock is up today. Now, we did open down. The markets currently are certainly better than the open, but they are down on the day. But we can see that Advanced Micros is again bucking the trend. It's up about 0.25%, and we're looking at a daily price chart. Again, those same simple moving averages. The green is your 10-day. We can see the RSI is trending upward, and your MACD is up above that net neutral zero. We've had that black line crossing up through the red, and that is constructive. This stock is potentially forming the right side of a base after pulling back to this 50-day simple moving average. So very constructive. This stock does look quite compelling. One of the other stocks that was on that most active list on the S&P 500 on Friday was AT&T. And we can just take a quick glance at that stock, and it's moving in line with the broader markets. This is that move on Friday. I would argue that this stock is extended. Quite simply, you want to look at the position of the price relative to that 10-day simple moving average. It's just a quick eyeball. You can see how positioned it is well above that 10-day simple moving average. So it does look extended. The RSI is up here above 70. That indicates that the stock is overbought. It can remain up here for some time, but this is just reminding you that at some point we could easily see this stock pull back. Your MACD down below is in positive territory. Now, I talked about using different time frames of these charts. So let's go ahead and drill down looking at an intraday chart of AT&T. And this is going to be really powerful, again, as far as helping you identify. We talked about the stock being overbought, and indeed, certainly we can see that on this intraday chart. This is a 1 minute. Each chart, each bar here is, 1 hour. Each bar here is 1 hour of price activity on this intraday. But the reason I want to point this out to you is I have two simple moving averages on here, a 5 and a 13. So it's going to be 5-hour and a 13-hour simple moving average for these purposes, because what we want to do, had you gotten into AT&T, for instance, back at the end of July, you would know that you could stay in this as long as it remains above these simple moving averages. Your RSI is still up here in positive territory, as is your MACD. But let's take a look at what may be occurring here. And we saw it again back here where it pulls back to that longer term. So right now we're continuing to find support at this longer term simple moving average. But should we get a break below and we see a pickup in volume, I'm going to take you back to this period here at the end of May where we did get that declining RSI. It broke down. So this is the negative action that would alert you to the fact that this extended AT&T stock could very well be rolling over. So let's see if we can take a look at on the NASDAQ. I talked about a couple of those stocks that ended the day up despite a negative market, and they were up on volume. So we're going to go back to the daily, take a look at that AMRN. As you may recall, that was listed on the close on Friday as having a lot of activity. It was up on the day when the broader markets were down. So now we are looking at a daily price chart of Ameren, and we can see it really is very constructive looking. Friday was its third big gap up. This is a biotech that was rallying on news from another large biotech as far as their one of their products. And this is another one that now is a bit currently extended. So from there, again, you could go back to that intraday to make sure that we're not in trouble. We are seeing this is that 1 hour price chart again, a bit of waffling here as far as the broader market indices. So I'm going to leave it at that, but hopefully you were able to get a sense of how you can use in the evenings, take a look at that market movers chart that is here in the forefront. You can do most active, percent up, and really, again, help you formulate a game plan going forward. So I also wanted to, I'm actually going to take a minute here and we will be right back. Welcome back. I talked to you earlier about the concept that we are in a period of the markets where we very well could see continued volatility. So with that in mind, again, you may want to take a look at some of these higher yielding stocks that very well could benefit you, that could buffer you from some of these this bouncing around that we're seeing. So before we get into it, I thought I would show you from this first page on StockCharts.com. We can go to what's called the Advanced Scan Workshop. So I've gone ahead and input a little bit of information here. So up on the top, it already is populated with the stock, what type of volume you want to see in that stock. Really, quite simply, what I did is added AND and then yield greater than 2.5%. So I want to see the 10-year treasuries trading at about 2%. I want to see those stocks that have at least a 2.5% yield. From here, we can go ahead down and you can select the sector, and really you can get quite detailed. But for our work today, I'm going to be using the entire real estate sector because it will go ahead and get us in front of these REITs rather than be selective, because realistically, most of these REITs are doing quite well. So it is a very good one defensive area. We'll go ahead back and look at another, but within real estate, and really quite simple. From here, what we are going to do is go ahead and run that scan. And it's just going to very quickly provide us, again, each name on this, and we can see, just take a look. And that could be very daunting initially when you think that there are 1,000 real estate stocks that are yielding 2.5%. So we're going to, again, hit the easy button, if you will, and go ahead over to this scooter. This is the StockCharts technical rating, super powerful. It is going to provide us with insight and tell us those stocks that are most technically sound. Go ahead and click on that, and it will sort this list. The higher the number, the better. And let's take, because I am getting a sense, I got to feel that there were a little more than just those real estate stocks. So it perhaps did not, and I'm going to guess that it's, let's see, yield I. So, rather than go back in and go ahead and run the screen so that it's only looking at REITs, really quite simply, we can take a look from here and easily tag those stocks within this 2.5% yielding domain, and quite simply formulate looking at some of these defensive areas. So here we are. This is the first REIT stock that showed up, CHCT, Community Healthcare Trust. It is a specialty REIT. It is a bit on the small cap side. So this is where you can also get selective by asking that you want to see large cap. And I will say from my work, I do tend to prefer larger cap stocks because they are going to be a bit more liquid and they are going to provide you with more well-trafficked types of stocks. Now, let me just go ahead here and see. I'm going to go ahead back to that scooter rating because that's going to be a bit more powerful. And then from here, we can quite simply just eyeball and see whether it is a large cap stock or not. So let's go back to some of these REIT stocks that are showing up. We talked about Community Healthcare Trust, and this really is a very vibrant area within REITs. These longer term care, we're seeing a population that is aging, if you will. So there is quite a bit of demand for these what are called healthcare trusts. So what I'm going to do from here is just simply click onto this chart icon and take us to a daily chart of CHCT. And you can see the stock is in a very confirmed uptrend. I've talked earlier about these simple moving averages. As they are trending upward, the stock has broken out. And but I will say there's not a lot in the way of volume. I talked about in my work preferring to see some of these more liquid, rather larger cap types of stocks. So let's go ahead back and take a look at these scan results and see if we can highlight just one or two, some of these more defensive areas, and even utilities, because we can see utility stocks are showing up here as having these higher scooters. Here's a large cap. Let me go ahead and make sure that we are sorted by scooters. And again, we can, does not have to be real estate. We can take a look, not so inclined toward LPs, but let's take a look at some of these other names that are also defensive in nature and are going to provide you with that nice yield. This is, see if we can take a look at MAA. This is another one that is quite constructive. We did see these REIT stocks pull back rather sharply about a week and a half ago on big volume, but most of them did rebound quite nicely. So this is another stock that is in an uptrend, very confirmed. Note that it does have a bit in the way of volatility, but by and large, the uptrend is intact. So that is one thing that I did want to share with you as far as the ability for you to screen for these higher yielding stocks. Now, I do still have time, which is great because I want to help with you looking at where these faster moving stocks are. So let's go ahead and quite simply look at the sector summary. This is today, sorted by today's activity, where the strength is in the broader markets. But we did notice that consumer discretionary was in the forefront when we were looking at the candle glance view, drilling down into the broader market. So from here, quite simply, you can click on to the name. It will provide you with a number of these sub-industry groupings. And from going through, you can from here drill down and look at some of the better names. Let's take a look at home improvement retailers. So I'm going to click on that. And this scooter is again going to be really quite powerful as far as pointing you toward the better stocks within this grouping. So we can quite simply look at FND. Now, this is a stock that is interesting to me because we can see it had a very big advance into this May correction that we saw. And oftentimes these bigger movers that shot out of the gate when the markets turned in December, they are movers for sound reasons. I will tell you, if you look at this, there will be earnings involved. There'll be a good growth story. The stock faltered in line with the broader markets. Retailers were not the first back off this mat, if you will, but they are starting to regain traction. So what I want to look for here is a reversal of this May downtrend. And the first signal is going to be a break above these simple moving averages. And we did get a bit of a head fake, if you will, here, because it did very briefly break above but fell. But more recently, this move up above these simple moving averages is more convincing to me. A couple of actions are telling me that. One is this shorter term 10-day simple moving average up above the red. That's called a golden cross. It's simply telling you that the momentum is turning a bit more positive. So that is constructive. I would like to see more volume, but last week we're looking at a daily chart. Last week was a light volume week, so you're not going to get a lot of volume confirmation on daily charts from last week, quite frankly, but we do have an RSI that is trending up above this 50, trending northward, and we also have a MACD that's trending upward above this net neutral 50, I'm sorry, a bit above the 0 net neutral. So this is actually a constructive looking chart. So let's go back to that consumer discretionary area, we talked about this is where the strength currently is in the broader markets. We can certainly look at some of these apparel retailers and see, again, by sorting with this scooter rating, where your stronger stocks are. And I've talked about you looking at larger cap stocks. This is TJX. We can take a look at the daily chart of this. And this one is getting a bit extended, but it did break out of, again, this daily price chart. We're looking at a 2-week view. I'm sorry, a 2-week breakout here. We did get pretty big volume considering what we saw last week. And oftentimes, this is another view that we can look at for those of you that are longer term investors. We are going to take a look at a weekly price chart. It's going to give us a bit more in the way of information. We can go back, see that this peaked in line with the broader markets last fall, TJX, and the stock is poised to break out of this longer term base. So if we see a break above that 56, that would be really quite constructive, because for those of you that are longer term investors, you may know this already. We're looking at a weekly price chart. The longer term the base that your stock breaks out of, the longer the advance is out of that base. And we can very simply go back to 2017, taking us back to May, when the stock hit a near-term high, and then 8 months later, the stock did break above that prior high. Take a look at this advance. This is about an 8-month advance out of this base. So again, if we are able to break out to new highs, that would be with an anticipation that the leg up out of that period would be for a lengthy period. And one other stock that we can quickly take a look at here is Boot Barn. This one is a little bit smaller, but it really is one of the bigger winners within the consumer discretionary area. But I will note that it is a bit volatile. This is a stock that I'm familiar with. With the MEM Edge report, we had it on our list during this period. But since then, it does bounce around. Now, this is the thing with these smaller cap stocks. I talked about for my work, I will tend to gravitate toward some of these bigger stocks. So we can take a quick look here at Ross Stores. This is another discounter that is in line with TGX. And this is another one that is really quite interesting to me here, because this stock did have a very healthy period here from the end of May into June. Again, all about growth, analysts raising estimates. It pulled back recently, but it did find support at this upward trending 50-day simple moving average. Today, it is breaking up above this 10-day. So very bullish action here. I would look for ROST to potentially, at the very least, come back up to this prior high here at the end of June. And one other area that we can very quickly take a look at within the sectors as far as looking for strength would be consumer staples, which has been up in the forefront. And there are a number of areas within consumer staples that are going to offer you that higher yield and that you can benefit from. This is Kimberly-Clark. I believe they have a 3.3% yield. Stock is poised to break out of this 3-week base, so acting very constructively. RSI, MACD poised to have that black line up through the red, which is bullish action, and your longer term simple moving averages are in an uptrend. So this very well could be a candidate for you to take a closer look at. We can see that on the weekly chart, this is your 50-day. It's been very much finding upward support for some time, and it does still look very constructive. So I'm going to go ahead and leave it at that. For those of you that are active traders, happy trading.